The 1 million retirement plan is a cruel lie. So I want to have a little bit honest conversation with you, mano a mano, because I oftentimes hear those, let's just call it very generically, people who, have that little bit of a dream of a retirement that, hey, I'm just going to, 20 years from now, I'm going to have a million, 2 million, 3 million, maybe 5 million. And, they just put their numbers, they look at their retirement, their 401k, they maybe put some money in, index fund, just kind of, VO and chill and think that, hey, I'm going to have those 3 millions in 20 years and everything's going to be fine. But, let's a little bit pause here, right? Because let's make sure that the numbers are actually correct, because this could be quite a painful mistake to make, right? To undershoot that retirement. So I'm just going to walk through my article because, basically I posted this article yesterday and it actually did quite a numbers, right? So 52,000 people already seen the article. So I think it's worth definitely pausing why there is, so much attention on this article. Because in this article, I basically put down hard math, right? Hard number, and it's hard to argue with those numbers, right? So basically what I'm stating here is that, of course, 1 million, it used to be a lot of money. Sure, if you would go back 20, 30, 40 years ago, sure. But we are at a different time now, right? You might have noticed, right? When you're at the gas station, when you're, and I've posted this just to make the point with like a one clear example, right? I posted this McDonald's inflation. And this is just 10-year differences, right? Between 2014 and 2024. So for example, McChicken went from $1 to $2.99, right? Or of course, there's the most extreme example. But if we just go through some of those, menu items, it's roughly double up, right? If you have, let's say, quarter pounder with cheese or 10-piece McNugget, right? It roughly doubled in 10 years, right? And okay, doubled in 10 years. Well, if government is saying that the inflation is 2-3%, that in 10 years the prices should go up roughly, let's call it 50%, right? If inflation is those, 10, if inflation is roughly those, 3%, 3% a year. That's kind of the government stated number, aiming to have inflation 2-3. But then you have some inflation spike as we had back in, 2021, 2022. After COVID, there was a big inflation spike, right? So sure, government might be aiming for those 2-3%, but then you have a couple of those spikes. And then secondly, I frankly don't really believe those government numbers, right? I think they are intentionally suppressed to make people a little bit sedated, I would say, right? So, we have to be honest with ourselves and just look with our own eyes, right? Look at that freaking McDonald's menu, because you can see that the inflation is not those 2-3% a year, right? And never has been, right? So I would argue that probably the real rate of inflation over the past couple decades was maybe somewhere closer to 4 or 5%, right? Even I remember when I was a teenager, right, and I was buying, bar of chocolate or things like that, right? I remember the number, and the number is not 50% higher, or it's not even double up, right? Compared to when I was a teenager, it's maybe triple up, right? So the numbers don't really match, right? And that also means that if this is what happened over the past 20 years, the same thing is going to happen over the next, let's say, roughly 10, 20, 30 years. Or at least we need to prepare as if that's the case, right? Because I don't think there is a scenario where magically the inflation is going to get, fixed, right? Government is still printing the money, right? Like, that's a reality. So what does that mean? Well, because that means that basically almost everyone is undershooting their retirement goals, right? Because, if you want to retire, let's say today, in kind of like a normal cost of living area, right? Let's say some kind of a little bit more upper cities. I'm not talking some, extreme high cost of living, I'm not talking Bay Area, but I'm talking kind of like your average city in the US or some of the, big cities in Europe, right? You probably need at least couple million, right? Even today, 1 million is not gonna cut it, right? You need at minimum I would say probably like 3 to 4 million to retire, to be able to retire today. And I'm talking like a proper retirement, not just for one person. I mean for like a family with a decent, quality of life. I mean house, I mean car, I mean, potential, education for children, all of these things, right? to be on the safe side, 3 to 4 million, right? And that means we also need to project these numbers further, right? So now let's look at the individual cohort, right? So what does that mean if you're 25? Well, if you're 25, you have 40 years to retirement. But that also means that those 4 million today becomes actually more closer to roughly 20 million by the time you're 65, right? Because if you run inflation, if you let inflation run for 40 years, 4 million becomes 20 million. So that 25-year-old who's planning to retire with a couple million, at 60, they're undershooting by roughly factor of 4, right? You cannot shoot for 4 million in 40 years because for 40 years you need 20 million, right? Insane amount of things is going to change over the next 40 years. So you need at least 20 millions by then, right? And then you actually have to run the calculation if you can do it. Because if you're just putting money in an index fund, you need 3K a month for 40 straight years, right? And getting those, index fund 10%. Of course, if you're like a competent investor, you're making qualified decision, then it's much, much easier, right? Because you're getting, let's say at least those 15%, right? You're beating market with a decent margin. Okay, then you just need 620 a month, right? That's very achievable, but you have to be a little bit more proactive. So if you're 25 or somewhere around that, in your 20s, use that time. That time is your mode, right? Use it, start ASAP, right? But it needs to be properly planned and aiming for the right number, not undershooting, right? Not just putting a 1K a month in index and call it a day. Not enough. If you're 35, right? Well, you have 30 years, which also means those 4 million that's needed today becomes more like 10 to 13 million by 65, right? Which means if you're at 35 and you have 0, you definitely need to start taking it seriously basically yesterday, right? You need at least 5K a month in index, or if you're kind of competent investor getting at least 15%, then sure, you need 1900 a month. Not unrealistic. Most 35-year-olds are making, some decent money, and, hey, if you can put those 2K a month into concentrated portfolio with real companies, hey, fair enough. But it needs to be done, right? Because, okay, now the clock is ticking, 30 years. If you're 45, well, then you have 20 years, right? Which means those 4 million, roughly 4 million that's needed today becomes more like 8, let's say, in those 20 years, right? So prices, and everything kind of at least doubling in those 20 years. And again, that's maybe being a little conservative with that inflation, but let's call it 8 million. If you're starting at 0 now, of course, now the numbers become really shaky, right? If you're at 45, you already need to have some base. But if you were starting from 0, you need somewhere around 11K a month into index, or let's call it 5,000 a month into more proactive, concentrated portfolio. Of course, you can also become really competent, that 15% is more still kind of like a conservative, somewhat competent investor. Of course, we should be aiming like 20, 25, maybe 30% annually, right? Then sure, we can maybe invest like 4,000 a month. But you can see how the numbers really start to be shaky relatively fast, right? So if you only have those 20 years to retirement, you have to get either somewhat aggressive or be okay with smaller retirement, right? So once again, I really want to make that point that, that diversification advice combined with government basically downplaying the inflation, it's really what I call financial sedation, right? It's kind of, want to make people, hey, like everything is fine, but is it really? Yeah, it is, but as long as we are proactive and really we take care of ourselves at the end of the day, right? We cannot rely on government or anyone else to save us. We have to save ourselves first and foremost, right? And then, of course, if you're 55, then, those 4 million needed today becomes more like a 6, let's say, right? So you still have a 6 years, which, you still have 10 years. And I'm also assuming that hopefully, at 55, you already have some decent base, right? So here you can look at the more specific numbers, and then it, of course, gets a little bit more shaky. We are somewhere in between and already have these things planned out, at least to some degree. But that's the point, right? Because now we have to zoom out and actually figure out, okay, well, how do I even make this happen, right? Because, okay, that was the math, right? Now we know what we need to do, because sometimes these numbers might look somewhat impossible. Well, that's not because the math is wrong. It's because the strategy is wrong, right? Personal finance and index fund industry has spent 30 years selling you a system. just a passive index fund, 60/40 bonds, target date funds, right? Kind of designed for inflation regime that no longer exists, right? So if you're just putting money in index fund or something like this, that's a bare minimum, right? That's kind of like, hey, I want to survive once I retire. But it's nowhere near like a retirement in terms of having actual freedom, having the ability to do things that I want to do. Nowhere near that, right? You cannot index your way to 5 million in today's dollars on a normal salary if you start at 35. The math just doesn't work, right? Anyone telling you it does is selling you peace of mind and stealing your retirement. Because once again, right, sure, you can just put money in index fund, but then you're getting to a very low number and you're just, your retirement is just going to be survival, right? Not any kind of like a freedom, opportunities, nothing like that. Yeah, sure, you can index your way into survival, but nowhere near to living a full life, right? And we have to be honest about this, right? Are we doing enough? Because sure, maybe we are fine with just the survival, but we have to admit that to ourselves, right? So what's the antidote, I suppose, right? Well, here's what does work, or at least what worked for me over those past decade that I've been investing, right? Becoming a competent investor, reasonably concentrate, usually 7, 12, maybe 15 companies, carefully chosen, right? Not based on vibes, not based on someone said something, not I heard about this on Reddit, right? Not hey, this person on CNBC came to pitch their portfolio. No, something that I actually understand, right? You can outsource thinking, but you cannot outsource understanding, right? The way I'm investing now is miles different compared to what I was doing, 10 years ago, where I had faint idea of what I was doing. Secondly, time arbitrage, right? I mean, we still have time, right? Even if you're 55, there is still a decade, right? That's a long time, but something needs to be done. Cash buys courage. So, of course, we also have to be reasonably proactive in managing our cash position, right? Most people just either DCA without any regard or just are basically like all in. No, when we actually can manage a cash position well, we can also catch some of the waves of the market and be more proactive when it's time to invest more and maybe a little more restrained when the market's flying very high, being overvalued, right? That's another thing that if we learn that micro skill, it will give us tens of thousands, hundreds of thousands back, but we have to learn all of these small things. And yeah, and ultimately do something about it, right? Because once again, how did we end up in this situation? Because most people just freaking play a game of peekaboo and just like pretend like the problem doesn't exist, right? And just go through their life and hoping things will fix themselves or someone will save us, right? Whether it's a government, whether it's you can name your savior, right? But at the end of the day, we all have our own capacity, our own agency to make the most out of our life or what we want to do out of our life, right? So at the end of the day, it's just about each of us and doing what's required, not just what's convenient, right? So yeah, back to the main point of the article, right? 1 million is definitely not what it used to be, right? It's just sedative. It's survival, right? So we have to do much more. But once again, like I want to on one hand, be a little bit more like, hey, give you the tough talk, but at the same time present the antidote, right? Because once again, if you are a reasonable person with agency, you can do something about it, right? You can structure a portfolio in a way that it really grows, and it just requires effort, time, understanding, competence, right? Nothing of that is easy, but all of it is worth doing. So yeah, appreciate ya. Take care.